Welcome, ladies and gentlemen. Here we are, 2024, first of the Money Market Matters webinars. It's Paul here, and I hope that you had an enjoyable break. I hope you enjoyed the festive period wherever in the world you may find yourself. I appreciate that we have a truly global audience in terms of those who join us. It's fabulous wherever you are in the world. You're very, very welcome. And I hope that you are ready for what my personal view will be an eventful and interesting year in markets, okay, for various reasons. And it's great that you're going to be joining us for these Monday Market Matters sessions, where we will try and make sense of those events that are coming down the line in 2024. But today, what we're going to focus on is, in particular, we're going to take a little look at trading European markets in 2024. Well, we have in previous sessions looked at, for example, US indices, and we will also take a look at Asian indices and Asian markets in the future. But today, we just thought I'd make you aware of what you can look at and engage with in terms of specific European markets, and in particular, what happens when people engage them on an intraday basis. So I'll just share some ideas and thoughts and concepts with you that you can take away and utilize in your own trading. So, as I said, we'll talk about European markets, and in particular, I'm going to focus on European indices on an intraday basis, and I'll explain more about that as we go deeper into our session. Of course, I want to make you aware of, what you need to be aware of before you trade. What do you need to sort of take on board in order to sort of give yourself the best position for success? And I'll talk about one or two of the simple tactics that we can utilize to help build a trading plan. And then, as always, we'll have a little check on the live markets. We'll have a little look at how, in particular, those European markets have opened up today, and also, how they've opened up for the start of 2024. So, as always, there's lots for us to cover, lots for us to go through. And as I said, we'll always have a little look at the live markets at the end, so be sure to stay with us for that. For those of you who don't know me, my name is Paul, traded for many years, okay, traded for funds, traded for clients. Primarily, I like to focus on FX indices and commodities for my own trading. I tend to be a trend trader, sort of the swing and position, longer term trading, and I tend to be a mean reversion trader, reversal setup trader for shorter term intraday trading and scalping. And so there will be elements of my experiences in that I'll be able to share with you as we go through our session today. So I appreciate, as I said, not only do we have a global audience, but we do have attendees here from not only from around the world, but also from all range of trade experience, from those who've been trading for a good while to those who are just starting out on their trading journey. And the Money Market Matters webinar it's about starting the week in the right frame, namely as we prepare for the opening of the US markets in about 22 minutes or so. So every Monday at 2 o'clock London time, we take a little look at the news that's coming up for the week ahead to be aware of it. We'll do the main element in terms of education, so something that can help build your trading knowledge. We'll also have a look at the ActivTrades platforms and tools that you have access to as ActivTrades clients. And also, as I said, we'll have a little look at the live markets as we go into the start of the US session. So, as I said, always plenty for us to discuss, lots for us to have a chat about. And as I say, start every session. When it comes to the news, what I always say is that you hear those who join me every week say that, if you're a new trader, I do not expect you necessarily to be able to analyze economic data, but it is very important that you know when that news is coming out, okay, in terms of the formal economic news, and you can find that out on the economic calendar. There is one on the ActivTrades website you can access, and there are other ones, across the internet as well. And you will also find that the ActivTrades analyst team will also send out at the start of a week, a little bit of an insight email into what's coming out that weekend, and then also individual specific content that deals with perhaps a specific piece of news or a specific piece of economic news or a specific company. So if you have not availed yourself of that, then make sure that you do. It's very useful, very helpful. A good team, the right stuff, and here we have in terms of what can we expect this week, and it's rather an interesting week. Of course, on Friday, we had the US non-farm payrolls jobs number, which beat its estimates, okay, which kind of maybe confused people a little bit. But what we have to, of course, be aware of is that we're in an election year in the US, so people will be taking a keen interest in those numbers, and they'll also be having to take a keen interest in what, if any, change to those, okay, updates to those previous numbers in the past, and that's what people will take an interest in. But with that kind of good number that came out, what it does do is it kind of took the wind out of the sails of the let's say of the excitable trading cohort who thought that the Federal Reserve will be cutting interest rates early this year, and perhaps even in March time, in kind of Q1 of 2024. Such an indication of a strong economy means that it's unlikely to occur that, and so we have seen we've seen a lowering of those kind of expectations of a cut in March, and is pushing it out to May. All of which has an impact, of course, on the US indices and on the dollar and the knock-on impacts that have across the board, and we'll look at that when we look at the live charts in a moment. But this week we have quite a bit of data coming out. Okay, you can see today we've had German trade balance and some Swiss inflation numbers. Tomorrow, okay, we will see unemployment rates out of the euro area, which people will be interested in, as along with trade balances from Canada and the US. We have the Australian monthly CPI on Wednesday, and people will have an interest in that. Of course, it will have a knock-on impact in future decisions by the Bank of Australia, Royal Bank of Australia. But I think probably what most people are interested in is that on Thursday we have the US CPI data, the US inflation data. And after the non-farm payrolls number on Friday, people will now be looking towards to see how that data plays out on this Thursday in terms of the US CPI data. So people are going to be acutely interested to see whether that number is softer or stronger based on expectations, because I think that will feed into a lot of people's decision making in terms of let's say the trajectory of markets for this first quarter of 2024. We also have on Friday, we've got, as you can see, the Chinese inflation figures along with British GDP, okay, and the US PPI, which will be of relevant interest. We also get a start of a kind of earnings seasons. We have a couple of the big American banks, so things like JP Morgan, Citigroup, etc. They will be releasing on Friday, and of course, once again, people will be interested to see, what their numbers are like and what indication that provides of the health of the US economy. So I would suggest that there is a bit of news coming out this week, but Thursday and Friday will be when traders will be keenly aware of the data coming out and wanting to be able to utilize that to help build a picture in order to make better decisions about the trajectory of markets for the next few weeks. So, as I said, economic calendar is always available on the ActivTrades website, and it is important that you are able to take that on board and work with it and build it into your own trading models. So, if you're done news, we'll move over to our education element, and as I said, we're going to focus on trading European markets in 2024 for this particular session. And I think it's fair to say that at the start of a new year, many people will be looking at the various asset classes that they can trade as we enter into, as I said, what will be an eventful year. We have a general election here in the UK. We also have general elections in the US and elsewhere, all of which will have an impact upon let's say the political decisions, okay, and the political trajectory, okay, that we will see for the next 4 to 5 years afterwards. So that will undoubtedly have an impact upon markets. So people start to be interested in the various asset classes that they should focus on to trade. We have in the past done sessions on trading US markets and US indices on an intraday basis, and we've discussed how trading indices on an intraday basis can be an attractive proposition for many traders due to the volatility, the liquidity, and the good-sized moves that you may be able to avail yourselves. But we have also covered that, in terms of things like webinars we've done on intraday trading, and in particular intraday trading in FX. If you are going to engage in intraday trading, you have to be thoroughly prepared for the endeavor, and we're going to talk about that in a couple of slides' time. But what we're going to do today is we're going to follow up from our session on US indices and provide a bit of a simple introduction to what you need to be aware of if you're going to trade European indices and other European markets like fixed income, etc., which are available to you on the ActivTrades platforms. But what do you need to be aware of if you're going to engage with, let's say, those European indices on an intraday basis? What can you do to help yourself trade them to the very best, the very best of your ability? So it would be interesting to know, of those of you joining us here for the session today, how many of you presently are engaged in intraday trading of European markets, European indices? It would be good to know those of you who what, if any, experience you may have. As I said, I appreciate there's some people who might be here because it is a completely new opportunity for you. That's absolutely fantastic. That's what these sessions are for. But it's always interesting to know what, if any, experience other people have had of trading European markets. So what I've often said, and I talk about this from personal experience as well, is that there are certain times of the year where traders may well focus on one asset class over the others. So they might be focusing on FX or equities and individual stocks, the overall equity indices, maybe fixed income, perhaps even crypto as well. Sometimes it's very clear which asset class people are focused on because of the momentum that we see in those markets and just the general energy that is displayed, and manifested in the way those particular markets move. Sometimes, as I said, it is very, very clear. Other times it is not. Other times it is not, and that I merely say that just to forewarn traders, that if you're unable to sort of identify that, which asset class is let's say in focus or in favor at that time, that doesn't mean that you're a bad trader. It just, sometimes it's not clear. Sometimes markets may be in a transition, as we see sort of large institutions, cycle through particular asset classes, etc. Sometimes it's other times it is very clear, and that's why it's interesting to me. Here we are, the first week of the year. My primary focus is FX markets for myself, and I will trade indices and commodities as well, and a little bit of fixed income, but not massively. But I know at the start of the year, I know at the start of every year, for my kind of position and trend trading, swing trading style, I know that there will be 3 to 6 what I would define as super trends throughout the year, especially in those FX markets. The challenge I have, along with every other trader, is I don't know where they'll come, and I don't know when they'll come. But I just know from experience there'll be about 3 to 6 super trends, and it's my job that once I've identified them to be able to sort of to try and harvest them as well as I possibly can. Which is why it's important to have a consistent routine that every weekend I'm doing my analysis, 90 minutes just analyzing the big pictures, so that I am in a position to recognize when those possible super trends occur. And it's the same, even for for all other asset classes. There will be times when trends become much more clear to us. So if we looked at, for example, let's say November, December of last year, there was a great deal of bullish momentum in equities and indices. That was became very abundantly clear, in the early part of November, and that allowed traders to just focus on that particular asset class. So, as I said, sometimes it's clear, other times it's not, and it is part of your trading journey to be able to sort of, as I said, build that into your routine to be able to understand that. But with that in mind, what we're going to do is we're going to look at the options with regards to European indices. So we've covered US indices in the past, but we're going to sort of look at European indices today and try and work out what we should be aware of and how we can basically utilize the tools that we have to make the best opportunity for us. What you will always hear me saying is that just to set the scene, if you're going to be doing any kind of intraday trading, that it is very, very clear to have yourself a very good trading plan, and in particular, if you're using something like price action, which is what I would look to use myself, it should be simple and clear for intraday trading. So what I talk about is constantly identify significant levels on the monthly, weekly, and daily charts. And if you're a new trader, you might be saying, well, Paul, why am I interested in that? I'm just intraday trading. Okay, I might be intraday trading on the 15-minute or the 5-minute chart. Why am I interested in the monthly or the weekly charts? The reason is that we're looking for significant levels on monthly, weekly, and daily charts. You, as an intraday trader, the start of your journey, you do not want to be buying into resistance or selling into support. So we just want to know where those significant levels are, because they can help us avoid foolish entry options, and they can also provide really good targets, in terms of where our trades may run to. What I'm also looking is at those big levels, if I can see things like significant price action triggers, which we'll talk about more in this session and future ones, that helps me. And what I also say is, when entering a trade on an intraday basis, be sure to wait for the break of the candle, and be sure to wait for the candle to actually close. Sometimes new traders, especially on an intraday basis, they get a little bit giddy, a little bit excitable, as they start to see the market unfold in front of them, and they get a little bit ahead of themselves and look to effectively sort of take a trade because they believe that candle may be sort of printing a particular pattern for them. So what I suggest is, on an intraday basis, wait for the candle to close, wait for the candle to break, wait for the price to break through the level of, whether it be the high or the low of the previous candle, in terms of giving you a trigger to get in. Just helps you, stops you from getting a little bit overexcited. Never trade without a stop loss, which should be on the other side of the candle. Never risking more than 1% of your capital for a trade. And what I normally say is, look for at least to have the ability to have a 2-to-1 reward to risk for your trade, or a target at the next significant level. That's why we talk about drawing those levels in. And it's very important, on intraday trading, that, you record your trades, you review your trades, and what you're looking to do is to repeat the best trades. Repeat the setups that resonate with yourself. Repeat the setups that you're able to identify early, that make sense to you, and you're able to take those trades. So, as I said, it's important to start having correct market routines, and we talk about that, and there's much more to goes in, but these 7 points, they're a good starting point. If you're doing those as a new trader, you start to just put yourself in a better position going forward. And the other element of it is that it is incredibly important to manage risk. Now, those of you who've joined us for our sessions, or you've been to some of the trading conferences that we've spoken at, ActivTrades and myself, well, you'll hear me talk an awful lot about the importance of risk management. Risk management is absolutely key. It's important that you honour it, all right, when you're on intraday trading. As I've said, know what news is coming out for that session ahead of you, because invariably when that news comes out, that might induce volatility into that market based upon the news and how the news comes out compared to the expectations. And so it's important for you to know that. What I normally also suggest is conduct your analysis before trading. So let's say for my longer term trading, I do most of my analysis at the weekend, on the weekly and the daily charts. And trade wise, what I normally suggest is do a little bit of work either the evening before or very first thing in the morning, in terms of just identifying significant levels, identifying where what, if any, particular trend is in place that you could utilize for your trading execution. What I also say is resist the temptation to trade out of session. Now, what does that mean when we're looking at trading European markets? Well, what we will see is that I sit here in the UK, so I'm going to talk about the European session is my natural time session. So certainly kind of the European morning time is the best time to trade, intraday trade European markets and European indices in particular. So trading at, let's say, midnight, London time, trying to trade, let's say, the DAX or the FTSE on an intraday basis, it's not the smartest moves. Of course you have the access to it, but the majority of that trading is going to take part in the morning European session, and then in the first couple of hours of the European afternoon, which is the US morning session. If you're going to intraday trade, those are the times you should be looking to trade European indices, European markets. It might sound, it might sound kind of a little bit blasé, but it is important for you to have a good internet connection. Okay, just make sure that there's, I've experienced that myself many years ago. Okay, when you're trying to trade, on a mobile device. Okay, and your internet connection fails, and it always fails at the most inopportune moment. Okay, so make sure you have got a good internet connection to be able to sort of manage your trades. And it goes saying that ensure you're rested and prepared for that session ahead. If you've not got much sleep the previous night or what have you, or if there's been distractions of one sort or another, well then you might want to just look at how that might impact upon your decision making during that European session. So this slide and the previous slide, that is all about pre-market routines, about making sure that you're doing the right things, regardless of whether you're trading European markets, US markets, FX markets, crypto, etc. Those are kind of steps that all good traders will be taking to ensure that they're in a position to make the best trading choices when they, when they're in the middle of their trading session. So, when it comes to European markets and European indices, what I find, from my work, coaching and mentoring hundreds, perhaps thousands of traders over the years, is that very often what we will see is that specifically with index traders, you'll find very often index traders will basically focus on trading European indexes in the morning, and I talk about that being the European morning. And then they would look to trade US indexes in the afternoon. Okay, so what would be the European afternoon, which is the American morning session. And as I said, I appreciate we have a global audience. You just need to relate that to where you are in the world. So very often what you will quite often find is that you will find many traders will trade the DAX 40, the German index in the morning, and then they may trade the Dow, the S&P, perhaps the NASDAQ as well in their afternoon, in the afternoon of the European session, which, as I said, is the morning of the US session. So quite often, I've worked with many traders who will operate that way, and they focus on particular on trading the US indices. So today we're going to focus on the European indices themselves, and hopefully give you a little bit of insight into what that entails and what you can actually do to help yourself with that. So when we start looking at the indices available, you've got to see, well, what actually do we have access to? What European markets, are provided to us by ActivTrades. You'll see all of the major European markets are available to you to trade through the ActivTrades platforms, whether that be MT4, MT5, ActivTrader, or TradingView itself. All of those are available to you. So we have the German index, the DAX 40, which under the ActivTrades will have the label of GER 40, as you can see. FTSE 100 UK, UK 100. The French index, the CAC 40, is France 40. The Italian index, the MIB 40, is the Italian 40. The Spanish index, IBEX 35, Spanish 35. The stocks, the Euro stocks 50, that is available to you. There is also the German tech DAX, the German equivalent of European equivalent of NASDAQ. And also what is interesting is fixed income, bonds, the German fixed income, they're on there as EU bonds, and that can be useful for us, and I'll explain that in a few moments' time. And what I actually have is on my platforms, as I'll show you in a moment myself, is that I have I have profiles set up. A profile set up for all various different instruments, but I have a couple that are set up for European indices. Hopefully, maybe you might be able to see this one. Let's just bring up the old drawing tool here. So what I have here is this is the DAX. What I have here, that's the CAC. I have the IBEX, the Spanish, the European, the German bonds. I'll have there, and I'll explain why in a couple of moments' time. There's also the tech DAX there, the Euro Stoxx 50, the Italian MIB, and then the FTSE 100 there. So I have that set up as a profile, and the reason I have that is it just very quickly gives me a quick snapshot, insight into into those kind of, let's say, those European markets, and I'll explain why that is important to me and what I'm utilizing that for in a few moments' time. So I always suggest to traders, whatever platform you might be using, TradingView, ActivTrader, MT5, MT4, okay, set up a profile, okay, of European markets, of European indices that allows you to take a very quick look at what the markets are doing, because it can be a really useful tool to help you start to build a picture, of what's going on in those particular markets. So, of course, one of the important things we've got to take on board is, well, how do we trade the indices? Okay, what can actually be our edge? Okay, it's important for traders to have an edge, and a trader's edge is, well, a trader's edge is a session all of its own. But a trader has to have an edge and has to know that edge, and that having that edge gives them confidence. Sometimes that edge will be statistical, okay, in terms of understanding, how a particular market moves and what is the highest probability move using statistics. Sometimes those edges can be a behavioral edge in terms of the way the trader has the intuition, the knowledge and experience to be able to engage with that particular market. But in a previous session about US indices, we discussed how to use the algorithmic traders for our benefit. It's no secret that algorithmic trading continues to grow in terms of in terms of the quantity and quality of it. And what we're looking to do is to see, well, how can we utilize that to our benefit? Okay, rather than trying to fight the algos, how can we utilize it to help us? And what I found through my own experience is that we want to understand and know that, but what I have found is that the correlations between those US indices and the way the algos drive them, whilst they are there, that they are generally not as strong as they are for the US indices, and that's no real reflection on the European indices. That's just an indication of exactly how strong those algos are trading the US indices. So here in the DAX, the DAX comes down to a double bottom and then shifts its way up. The CAC comes into a bottom. It's not really a double bottom in the same way. But the FTSE comes into a bottom. It might even be a triple bottom there, and the IBEX kind of has a kind of a bottoming formation there before it shifts up there. That's just one very brief example there where we start to see, there can be correlations between the European indices. They may not be as clean, okay, they may not be as clear as sometimes you see with the American indices, but they can still help guide us. Okay, when I see charts like that, what that's telling me is that the algos are very much in control. They're very much driving those markets, and as I said, I don't want to fight that. I actually want to utilize that for my own benefit. That's what I want to do. There's it's just madness to fight markets. Okay, I mean, you're welcome to fight markets, but you'll probably lose. Instead of doing that, let us change it. Let's utilize that correlation to help us, to benefit us, to see how we can use that to make better trading decisions for ourselves. That's what we're particularly interested in and looking at. So what we're also looking at is in terms of in terms of intraday indices, what we're in a position to do is we're still in a position to use the kind of existing tool set that we've talked about in previous webinars. So, and you'll be able to see them. You should have access to them on the ActivTrades webinar archive. So if you go onto the educational seminars, educational webinar piece, you will also see there is an archive there, and you can see myself and my colleagues. All of our webinars are on there, and in my own particular ones, we've talked about specific setups or tools that are available there that you can see on previous webinars. Things that I'm interested in, things like previous highs and lows on an intraday basis, things like double tops, double bottoms, okay, 1, 2, 3 setups. You'll hear me describe them, and also specific price action setups, and price action combinations. And the reason is that I want to keep it as simple as possible whenever I'm engaging on intraday trading, whether it be FX, whether it be US indices or European indices, or even commodities. I do a little bit of intraday commodity trading, but not as much as certainly FX and indices, in the way I work. But what I want is to be able to recognize just simple setups that I can see when I see them occurring again and again at significant levels or significant areas of interest. That is where my edge is. That is where I'm looking to do my business, all right? And that's what I start to get interested in. So, for example, even here, and I think this is a DAX trade, but I don't know, and actually I don't care, because what I'm looking for is to be able to see the sort of same patterns and behaviors, regardless of whether it is the DAX, the FTSE, gold, oil, euro dollar, cable, S&P, Nasdaq, etc. I'm looking for a confluence of events to happen to give me an indication. So in this particular case, having come out of the Asian session, we've clearly hit a level of the previous day's low, and what I've seen there is that there's a double bottom there. Okay, in my own style of trading, there's kind of that would be like what I call a double top and bottom 1, 2, 3 pattern there before price moves up. Okay, and that's what I'm looking for. So if you already have let's say a specific setup that you particularly like using on other timeframes or other instruments, they can still be valid on European indices, but you might just want to take a little bit of time to do some back testing to see if it favors a particular European market and a particular time frame. All right, and that can be that back testing can be done either manually, okay, or there are certain commercially available back testing tools that you could utilize also if that is your particular desire. Okay, but as I said, the reason I'm doing it is because I'm just looking for simple setups, simple patterns. I've learned from many years of intraday trading, okay, for funds, clients, myself, is that it is better to have a simple setup that you can execute flawlessly rather than an overly complicated setup, which becomes challenging, all right, in a very fast-paced intraday environment. Okay, I've and I talk about this. I talk about this with very personal experience from all through my life, from on being on the sports field, the battlefield, the boardroom, the trading floor. A simple plan executed flawlessly will more often than not beat a complex, supposedly perfect plan. All right, I've just learned that across too many environments to realize that's the way to do, and it's the same with my intraday trading. Simple setups, simple tools, executed well. That has worked for me. Okay, and it is the wisdom that I would share with other traders who are looking to engage on an intraday basis. So where I will start here, okay, where I'll start is, as I said earlier, I've got a profile, okay, profiles that I will utilize. And we can see here, this is a European index profile. So you can see, it's the daily charts of, I have the DAX, the bonds, the tech DAX, the stock 50, the CAC 40, the French, Spanish IBEX, Italian MIB, and the UK FTSE. And as I said, I just want to basically, I can start off on the daily, have them all on the daily chart to get an indication of where is the trajectory, where is the particular bias and direction. And I'm hoping you can probably see here, just taking this, is that in the particular the DAX, we had a very strong uptrend, and what we have done here is kind of a bit of a double top as we drift down. CAC 40 has kind of done the same, all right, okay, drifting it down. The bonds, okay, bonds were also kind of, their prices were rallying, okay, and now we see them dropping. And what I will very often see, okay, is the reason I will have the German bonds in there is that quite often there can be an inverse correlation, okay, between the DAX and the bonds, okay, namely as and some of that can be towards being like risk on and risk off, understanding risk on and risk off behavior, and seeing the correlation there, which can help just confirm some of the particular signals I might be looking for. The TAC DEX, okay, is kind of a similar in that yes, we had a significant uptrend, and actually we went sideways and had a false breakout before rolling over. The Eurostoxx 50 looks very, very much like the DAX. That shouldn't really come as a shock because the sort of kind of the Eurostoxx 50, the sort of the 50 biggest European stocks, is pretty much mostly made up of the DAX 40. Okay, so it's not a shock that the price action there is very, very highly correlated, and as I was saying earlier, it is when I see correlations, okay, when I see them, these indexes moving, in lockstep together, that pleases me, okay? That pleases me because that sort of shows me that probably the algos are in control. The algos are doing their job and driving the markets in the particular direction or have a particular bias. And as I said, I don't want to fight that. I actually, I want to ride that. Okay, I want to think of it like surfing those bigger waves. I'm looking to surf the algo wave. Okay, I'm not looking to try and fight it. I'm not looking to try and be a smart aleck, as we would say in the UK. Okay, I'm not looking to try and beat the market in that sense. Quite the opposite. What I'm actually looking to do is just identify with the bias, identify when there's a clear correlation and clear direction, and then look to surf with that. Okay, look to surf that way. So I'm hoping, as I said, Eurostoxx 50 invariably looks very, very close to the DAX 40. IBEX, the Spanish IBEX there, okay, I'd say actually probably more of a triple top, and it hasn't dropped like the DAX has, but you can see that there is correlation there, okay. The sort of the MIB, okay, the MIB, the Italian MIB, a bit of a double top, but actually it kind of also had a false breakout there. Okay, they are interesting to me. When I look at that, the IBEX and the MIB, whilst they are kind of taking a pause, that they haven't rolled over in the same way that the DAX and certainly the CAC has. FTSE will, for a good part, it will follow the DAX generally, and a lot of that is not necessarily the UK following the German index. What it is that these days with the algos, it's almost like global indexes in terms of the US markets. Probably account for about 70% of all the let's say the capital allocation in terms of markets. And we are looking at that in terms of how that we're interested in the kind of the effect that has on those particular markets themselves and stuff. So we're looking to try and, as I said, once again, we're looking to try and work with that. We're not looking to try and fight it. Okay, but the FTSE, it has risen and it has rolled over, but not as strongly as maybe we have seen on the DAX itself, and we'll look at that in a moment. But the whole idea is daily start. Look at where's the daily bias, where is the daily direction? Is it clear? If it is clear, I can utilize that in my own particular trading and setups, and that's what I'm particularly looking for. As I said, when we have look at that for the daily start, well, then I tend to do most of my intraday work to begin with off the 30-minute chart. I personally find the 30-minute chart. Some people like the 15, some people like the hourly chart. Part of that is about what works for you in terms of your own, let's say, your own lifestyle, your own time commitments. But I tend to find that the 30-minute chart is kind of like a Goldilocks. All right. Sometimes the 15-minute chart can be a little bit too fast. Sometimes the hourly chart can be a little bit too slow. And so that 30 minutes is kind of like the 30-minute chart is like a Goldilocks there. And I just find it works and suits well for me. So having looked at the daily charts to get an indication of some direction, well, then I'm looking at, well, how is that playing out on the intraday basis? In an ideal world, if I have let's say on the DAX, if I have a daily trend direction that is down, then in an ideal world, what I'd be looking for is effectively maybe a bullish false breakout or a bullish move initially and kind of manipulation to give me an opportunity to sort of ride the short-term direction in the long-term direction. That's the ideal setup, but as many of you will know from trading markets, what you want and what you get can be two very different things. And the good thing about intraday trading is that regardless of that daily direction, even though sometimes there will be opportunities that just show themselves up, because actually what's happening is that the intraday, the market is actually making its move in terms of it is just effectively, it is filling orders, and it is basically making its moves and directions as it positions itself, okay, in line with the let's say the longer term trend. And that's what we start to become very interested in terms of recognizing how that can particularly work for us. And we'll have a look at that when we switch across to the live charts. We'll have a little look at that, how that particularly is looking to set up for us. But as I said, what I'm interested in here, let's just take that, is just looking at, I'm always interested in how does the market work on the Asian session. I'm always interested to see how market pushes out of the Asian session, and then looking for the kind of the what I'm interested in, okay, is in an ideal world, I want a very clear daily direction, and I'd love an opportunity for price to pull back and give me an opportunity to enter that. That is my preferred setup. But what you want and what you get can be two very different things. And the good thing about an intraday trade is that regardless of the daily direction, okay, there will still be occasions where I'll have particular setups that work for me. So if we looked at, one second, let's just clear some of this down here. In particular in the DAX, okay, even though we saw we have a bit of a daily movement, we can see that actually, okay, particularly on Friday, price basically bust out of its European or Asian session before it reversed and pushed its way all the way up. Now, part of that work was because of the reaction to NFP data, but as I said, what I'm looking for is to see, is there correlation? We can see price drifted down and then pushed up, and that was the same for the CACs, the same for the IBEX, okay, MIB, same for MIB. Eurostox, as I said, no surprise, see that's the same. Even the FTSE, okay, even the FTSE was doing the same as well, and that's what I'm looking for. When I see correlation across similar assets, okay, similar instruments, that is what gives me great confidence, okay, in what I'm particularly looking to try and achieve and try and trade and do, okay. All of those things are helping me, as I said, because I don't want to fight the market. What I want to do is I want to I basically just want to flow. All right, I want to flow with the let's say the dominant order flow. I want to, as I keep saying, I want to surf that wave. That's what I'm looking to do. Don't try and fight it. Just try and work with it when I particularly see. So, what other ways does that look? Does that actually look in terms of markets here? So, well, what I'm interested in is seeing things like, as I was saying, what I particularly like to do is you can probably see on my intraday charts, I will have drawing in the kind of the overnight Asian session. So it helps me identify the European session, and it also helps me identify when we have kind of broken out of that European session. So here, the DAX, okay, there's the overnight Asian session, and as I said, when price breaks out of it, I'm looking for it. When price breaks out of it, I'm interested. The CAC doesn't have in this particular instrument, doesn't have it only opens earlier, but what we can still see is that it's the same. What I'm interested in is the same movement here in the FTSE as well, okay, breaking out of the overnight session, and then actually how that price reverses off that. Very often, we will get some manipulation before we get the actual the real trend, and that's what I'm particularly looking for. And as I was saying, what I'm interested in is when we see, let me just clear some of these down, is when I see particular sort of kind of price action movements. Okay, I talked earlier about how I particularly like things like double bottoms, double tops. All right, that's when I see those kind of after a move out of the Asian session. Okay, that's where I'm starting to look to do my business. Remember, I say, for my longer term trading, I tend to be a trend trader. For my intraday trading, I tend to be a mean reversion trader. Right now, in an ideal world, okay, when I know that basically when in this particular game, when I know the DAX, the daily chart was down, what I'm actually seeing when it pulls up and then it starts to push down, that is a move as an intraday move. That's my preferred move, okay. But as I said, what you want and what you get can be two very different things, and a good trade is about being able to adapt to understanding the kind of the market that plays out in front of you. So, as I was saying, what I'm looking for is I look for correlation on the the four major European indices. Okay, so in this case, DAX, CAC, FTSE, okay, IBEX, and I said I will also include the bonds in there. And what I'm particularly looking for is in this particular example, price reversed, okay, off the DAX previous days, off the DAX's previous days lows, and also what we saw was that is the same off the basically the FTSE's 50 period moving average. So as I was saying earlier, prices come out of the Asian session, confluence events comes down to the previous day's lows, put in a double bottom, and that is my trade. Okay, that's my ideal trade. And when I'm seeing kind of the correlation and the move, all right, across other European indices, well, then that is what that's what kind of makes me happy. That's what gives me confidence. Okay, so I'll be focusing on DAX. That's where I want to do most of my business because I know that there is a good average daily range there that's to be traded. Also, in terms of cost of business, in terms of spreads, are tighter on things like DAX and FTSE. So, ideally, as you grow in terms of your trade size, these things, spreads become a cost of business. ActivTrades provide very good competitive spreads. It's about work. As I said, once again, I want to work with that rather than fight it. So, as I said, correlation is key. Okay, don't fight market. And when I see, in the same way I look at when I do US indices, when I see all of the markets looking and operating in different directions, that is normally enough for me to sort of hold myself back a little bit and wait to see how the markets are going to what those markets are doing. Correlation is key. When there isn't, when the DAX is going up, the FTSE is going down, the CAC is going sideways, the IBEX is going up, when there's major divergence between the indexes, that to me is normally a decision that the algos aren't in control. No one index is in control, and actually maybe there's a transition going on, there's a change going on, and I'm very happy to sort of sit on the sidelines and wait, let them battle it out, and then wait to sort of to get on board afterwards. So excuse me. So as I said, that's what I'm particularly looking for. But one of the other things I will look for is price action combinations. And those of you who've joined me in these sessions, I talk about it all the time. Confluence of events. Okay, confluence of events. When I'm seeing 2, 3, 4 things coming together at one time and place, that is, those are my trade ideas as a mean reversion trader. This was a little trade on the CACs, okay? Even though I said I'm mostly focused on DAX and FTSE, I'm open to whatever the market shows me. And in this particular case, what we saw is that, as after the open of the CACs, we blew ourselves up to the previous day's highs, okay? And then what we start to see is, there's a very big pin bar there. These are inside bars. This is what I would term as a momentum reversal candle here. So that, I'm getting that kind of the confluence of events. Namely, I'm getting, candlestick reversal signals after a move up at the previous day's highs, and that is an opportunity for me to basically, as a mean reversion trader, to short back into the range. Okay, that's what I'm looking to do, and that's where how I look to particularly operate. As I said, in an ideal world, I would love the CAC to be on the daily chart, to be in a downtrend, because that just likelihood means that this move here will happen faster and stronger. But as I said, what you want and what you get can be two different things, and it's about you being able to have this situational awareness to understand, what the environment is that you're operating in. And this is just an example of from the last week, and this is terms of understanding that this is a 30-minute chart on the DAX, and it's just about understanding, as I said, confluence of events. Okay, in this particular case, we had a really big start of the year, big strong breakout. Okay, there you can see, and then invariably we put in it's kind of like, some people would call that tweezers, some people call it twin towers, or people would look at that as being, a bearish engulfing candle, or people would look at it as being a bearish key reversal candle. Okay, either way, it's telling you there is a reversal happening in the mean reversion. Okay, but and you can see price drops its way until it basically hits the previous week's low, where it puts in a morning star formation and pulls up. But what I'm kind of interested in is as I said, confluence. When I see rejection candles, so here we have, a very nice pin bar that is also, clearly it's pinning and it's bouncing off the 20-period moving average and the 50-period moving average. Now, admittedly, I wouldn't have been trading this because by this time of the sort of the day, okay, sort of, late European session, that's not what I'm looking to trade. But what I just want to show is that it is about recognizing confluence events, because actually what we see is we've had, let's clear this down here. What we've had here is, we've had a high here, we've had a high here, and then at the very start of the next session, what happens is we pull up. And where do we pull up? We pull up into the 50 and the 20, 50 and 200 period moving average. And then what do? We put in a rejection candle there, a very nice rejection candle, which becomes a version of an evening star before, as you can see, price moves it down. We've had basically the two shoves there. And then the following day, price pulls out, okay, of the European, of the Asian session. And what happens is we hit this 30-minute, 50-period moving average. And what do? We actually pin it there, okay. Now, admittedly, we go sideways, but then, what happens is, we roll over and drop, okay, and we get enough to have our intraday trade set up there, okay. And so, as I said, I find the 30-minute chart is quite good for that. I find actually the interaction between the 30-minute chart and the 50-period moving average, which is the red moving average on my charts, I find that there tends to be a good relationship in terms of the way they interact, and that can be enormously useful for me in terms of finding a confluence of events to give myself a good trade setup. So, final point, okay. So what I always suggest is, as I said, build a profile, okay, on your ActivTrades platforms for your European indices, and watch how those markets react on an intraday basis. Are they moving in unison, all right? Or are they moving separately? Because if they are, the algos aren't in control. I tend to step away. How does price react at previous highs and lows, okay? Previous days, previous weeks, have a look. You might be intrigued to see what the price action like is there. And did that create an opportunity? Was there a mean reversion opportunity there that you could take advantage of? So to conclude, ladies and gentlemen, as well as US indices, hopefully now you can see that European indices, they're an exciting asset class, and that does provide us opportunity. But as always, whenever you're going to be doing intraday trading, it's important to be thoroughly prepared and be aware of upcoming news items. And you've heard me mention it many times during this session. Is there a strong correlation? Okay, if there is not, then you might want to suggest avoiding it. Go trade elsewhere. Is one index in charge? Normally, that's likely to be the DAX, but not always. But normally it is. And if it is, well, that's what you want to follow for the session. Make sure that you're aware of, are there any particular static, okay, or dynamic levels of support resistance in place? So static would be things like previous day's highs, previous week's highs, big round numbers, significant levels, okay? And dynamic is levels like moving averages, okay, which are constantly moving and updating, and that will basically, provide you with that opportunity. But always manage risk as always, okay? Now, unfortunately, because of the little text glitch, I'm afraid we don't have time to look at the live markets today, so I apologize for that, okay? But just a little bit reminder that Monday Market Matters is back next week, 15th of January. The educational will be on trading the star formation, okay? Trading morning stars and evening stars. So I hope that you will join us for that. Just as I said, just to finish off, if you've got particular questions or comments, or you want to speak to your trade representative, okay, you can contact the English desk there, 0207 6500 567, or more importantly, email them englishdesk@activtrades.com. So I apologize, we overran there, a little bit of tech glitch, wasn't it, and stuff, so I apologize for that, okay? A bit challenging, but it's back. We're back in the game, okay? We're back into our webinar flair. Just before I finish, I think there's a question there from Sen. Can you use the correlation between US indices, S&P 500, NASDAQ down, the DAX 40? Yes, you can. And what we have seen, okay, is that I would say in the last couple of years, since the kind of COVID lockdown, you will also see more significant moves in the morning European session on the US indices. They still do the majority of their work, in the US session time, but quite often you will see correlations, okay, between the sort of the European indices and the American indices in the morning. It is also sometimes worth having a look at how the Asian sessions, okay, how the Asian indices sort of, followed through. Has there been, if there has been a bullish close on the American indexes the previous night, and that followed through into the Asian being a bullish session for indices, well, it might well be that you will see a bullish move for European sessions, as most of these indices generally just tend to follow what the US do these days, unless there is specific news or a specific geopolitical event that will change it. So I hope that will help you with that, Sam. So as I said, ladies and gentlemen, thank you very much for joining us. I apologise for the little bit of the tech glitch, okay? Apologies, but hopefully that gave you a little bit of insight into trading European markets, and in particular intraday European indices. As always, I wish you the very best of success in your own trading endeavours, ladies and gentlemen. I hope that you'll join us next Monday, 2 o'clock London time, where we'll talk about trading the star formation. Until such time, have a great trading week, and I will speak to you soon, everybody. Thank you very much. Cheers.